So, Larry, last week when we were talking, it was optimism verging on euphoria coming off those very strong jobs numbers. What happened in the last week? What really happened in the real world that may have affected us the way the markets reflected?
Look, David, there wasn't that kind of optimism on my part. It was nuts for the market to be back at its beginning of year level. It was nuts when, on some measures, the total enterprise value, including debt, of American Airlines was back to where it had been before, even though it's going to be years before their volume gets back to where it was before. It was the equivalent of creation science to think that we could open everything up and not have any kind of second wave. It was crazy the way penny stocks and stocks just back from fraud and stocks in bankrupt companies were surging at the end of last week. So the miracle isn't that there's something remarkable that you have to explain this week. The miracle is where both the markets and popular thinking had gotten to by the end of last week. And the story of this week was a reconvergence towards sanity. Sanity that this country has a long slog to full economic recovery. Sanity that we haven't seen all the financial distress that's going to accompany the dislocations that have taken place in this expansion. Sanity having to do with the fact that this virus is a long way from gone. We are a long way from herd immunity, and we are a long way from an effective vaccine or therapy, and we're still fiddle-faddling around, not moving strategically, strongly, or effectively on testing. So all those awarenesses, which were always there, but people lost sight of because a jobs bounce back happened a month earlier than they thought it would. That's always been the story, and that still is the story. And markets got back towards recognizing that this week. It's to Jay Powell's great credit that he doesn't go into random fits of euphoria when he gets a good statistic, the way some of the other financial and economic officials in the administration do. And that's not easy for him, and he deserves to be saluted for that.
So picking up on Chairman Powell specifically, he was fairly sobering, I think, in his remarks. And he said things like, unemployment may well be double digits at the end of the year. Has the Fed done, as a practical matter, just about everything it can do at this point?
I think the Fed has fired most of the ammunition it has. We could have new problems in terms of very weak financial institutions, new problems in terms of a sharp widening out of credit spreads. There may unfortunately be new opportunities for the Fed to play defense and protect the economy. But I don't think the Fed's got a lot left that it can do on offense, which is why I think fiscal policy is going to be so very, very important going forward. And I think the discussions about the possibility of delaying fiscal stimulus and limiting fiscal stimulus are very unfortunate.
So as you suggest, we did see the virus spike up in some of the southern states, in particular, Florida, Texas, Arizona, and as well as California. The absolute numbers may not be that high, but certainly the trend is disturbing. We heard from the Secretary of the Treasury this week, Steve Mnuchin, who said, really, we're not going to shut the economy down pretty much whatever happens with the virus. Does that make sense?
I think that if you had to take the 5 most unfortunate economic statements of this administration, and there have been some doozies, that one would fit comfortably in the top 5. First rule of economic policy making is never say never in an extremely uncertain world with plenty of unknowns. Second, he can't possibly mean it. The second wave of the pandemic was more than 50% worse than the first wave of the pandemic. He doesn't have actual control over whether the economy is or is not shut down. Governments have the legal authority, and people have the legal and moral capacity to decide whether they're going to stay in their houses or not. Does anybody believe that if we have a second wave that is substantially worse than the first wave, that everybody's going to continue going about their business, or that that would be a good idea? Is that a belief that any serious person holds? Does anybody think that it's inconceivable that we'll have a second wave? I don't think the answer in either case is yes. And therefore, I find the statement inexplicable, except in one way: raw, simple sycophancy towards the things that the president is saying. No one would base an investment decision on an idea like that, certainly not someone who's been as successful as an investor as Secretary Mnuchin was when he was in the private sector. So you can debate what the likelihood of a second wave is. Right. You can debate to what extent closing things down slows spread. But to say that no matter what happens, we won't close things down is to depart from the realms of reality and responsibility.
So, Larry, you don't want to give investment advice, and I want to ask you to, but if I'm an investor and I'm listening to you, give me a sense of what I should expect in terms of the economy, in terms of unemployment going forward and growth for the next 6, 12 months.
You're right. You're right, David. I don't want to give investment advice. I think there's a good chance that we have made, at least for some time, a bottom in terms of GDP and in terms of employment, and that things will get better from here. But we're in a very deep hole, and we're going to still be in a very deep hole, and we're not going to be halfway out of that hole a year from now. And so, yes, the rate of change will improve, but no, the situation won't be remedied or normalized. And we basically had only a small number of episodes of downturn of this magnitude. We had one during the Depression, and policy became complacent and pivoted back to tradition about budget deficits and the like in 1937. And we had a calamity that made it so the economy never really got going, except when that was forced by the Second World War. We had a pivot back to traditional thinking, right, worry about inflation, worry about budget deficits, right, and the like in late 2009 and 2010. Right. And that's why it took 7 years for the economy to recover. So the big danger is that people are going to become complacent and think that we're most of the way back. I don't think that's very likely.